Hi, this is Katie again from Certum Solutions here in North Carolina. And you may not know this, but if you recognize this sweater, you've actually been hanging out with me all day on numerous videos because I'll be at QuickBooks Connect next week and I'm trying to knock some out so you all have something to watch while I'm gone. So that all being said, I just finished a video on the QuickBooks payroll overview in QuickBooks Online. That is not for desktop. And so I thought a perfect follow-up to that would be a video on your year-end tasks that you should be doing if you are a business owner or a bookkeeper and so forth. Now for this video, I'm going to be using QuickBooks Online, but if you use a different program, a lot of these same ideas apply to multiple different programs. So don't give up on me yet. Before I move on, you know what I'm going to say. If you like this kind of content or this video in particular, please do me a solid and like the video down at the bottom. That way I know you like this kind of content. If you like the kind of content overall that we have here at Certum, make sure you subscribe to our channel so that you can get alerted when that great content comes out. And when we have special stuff that happens, we actually message you and send you a message here on YouTube. So thanks again for watching. So let's get started. Now, as you can see, I'm in my QuickBooks Online Advanced demo, and I've purposely chosen the dashboard to click on because this is what a business owner will see. Now, if you're using the accountant edition of QuickBooks Online, maybe you're a firm or bookkeeper, you can actually also see this overview in this books review piece. But what we're going to do today, you can still do just about as easily without those options. So let's go ahead and click back on the dashboard view, okay? As a business owner, I see my cash flow forecast. This is just a sample, I believe. I don't think it's actually keying off of the transactions in here because we don't have a whole lot in there because it's a demo file with some goofy transactions, fake transactions. But that being said, you can actually come down, look at your cards, look at your profit, loss, expenses, and so forth. The first thing I would do before you dive in any further is just eyeball your bank accounts and give them the sniff test. Make sure they look pretty accurate. If I was looking at this today, I go, okay, checking's got about 20,000. If that roughly matches what's in my bank, I'm happy. This one's negative, so I'm guessing there's something that's misposted. I probably need to reconcile these. And it doesn't just apply to your bank accounts. This can apply to current liabilities, long-term liabilities, your assets, your fixed assets in particular, if you're doing depreciation schedules on your book values, which that I may have lost just half of you there, but I apologize if so. But stick with me. Anyway, it can apply to just about any account that's on your balance sheet and your profit and loss too. The thing to remember in accounting is that your profit and loss is what's called a temporary statement account. All those P&Ls, your income and your expenses, other income, other expenses, cost of goods, all those funsies, they will roll up at the end of each period and close out to your balance sheet, which the balance sheet tells you what it is in the name, right? It's making sure everything balances. And when you talk about accounting, which now I'm really going off the map, all of the accounting we're doing today is based off of one small but complex equation called the accounting equation, which is based off of your balance sheet. Okay, your assets equal your liabilities plus your equity. If you're a first year accounting student, congratulations, I just gave you that. That's a little nugget. But once you get the hang of that and you look at that balance sheet and you know that that's the equation, that's what we're doing. That's why it's called the balance sheets, because it has to equal. Look at me with the seventh grade algebra too. Woo, I'm on fire. So that all being said, yeah, so you have your balance sheet, you have your profit loss. Another term you'll hear a lot about is your trial balance. Your trial balance is basically just your balances from all your accounts, and they should be the same at the bottom. If they're ever not the same, you probably have a corrupt file or something glitched a little bit, and make sure to reach out to us. Okay, wow, this might be a longer video than I was expecting it to be. Okay, so we've taken a look at our dashboard, which really that's just kind of to get yourself warmed up, okay? If you go down here to your report section, I'm going to pull this up. And depending on what kind of close process you have, You may be somebody that looks at your balance sheet, your trial balance, your profit and loss, then your accounts receivable, accounts payable, and so forth. Me, I like to start with a balance sheet review, a P&L review, that's your profit and loss, and then I dive a little deeper. I pull up my accounts receivable and accounts payable. Y'all didn't think about that, did you? When you're coming up on the end of the year, it's critically important for you to go through your accounts receivable, your accounts payable, your payroll reports, anything that's like a sub report of your big stuff, and make sure those are all accurate. Because, like right now, we're at the end of November. We can be doing this prep work to get ready for next year now, today, instead of doing it the 1st of January, when guess what? Everybody's going to be going crazy, and your tax person's already going to be saying, where are your numbers from your business? I need to do your taxes. Plus, you have 1099s coming up and everything. And if any of this seems like a lot, just reach out to our team. We do this all day, and we would love to help you with your books, okay? And I'll put that information in there too. But if you're up for listening to me ramble on a little bit, I'm more than happy to help. Okay, so let's start off with our customer balance report or balance detail. You want to look at this and you want to make sure that any customer balances are accurate. If you see a negative, that could be because they have a deposit, or it could be because something's been misallocated in the rest. But basically, you want to reconcile your accounts receivable account, and you're going to do a lot of that through your customer balance detail report, your AR aging report, and the rest. You want to do the same thing for your AP report, right? Your accounts payable, for those of you that haven't heard that before, okay? So down here in our payables reports, I would just want to look at my open bills. I want to make sure that all my balances are accurate and the rest, okay? Let's go ahead and take a look at our vendor balance detail. It came right up as soon as I was about to give up hope for today. So I would look through my AP report. Looks a lot like your client detail report. And I know a lot of accountants prefer the aging reports to look at and things like that. I'm a tabular person. I love looking at my lists. So I take a look here. I want to make sure everything looks correct. If anything looks funny, you still have a month to get all this cleaned up before the end of the year. Okay, you don't want these kind of problems to carry on to future years, because that's the stuff that's going to keep you up at night, and that's the stuff that's going to give you a headache. So with that being said, I also want to look at my payroll reports, make sure that my payroll for the year has been paid out according to any compensation letters. If you need to make any adjustments, as very common, any rounding adjustments at the end of the year, make sure benefits are tying out according to any agreements in your compensation letters and things like that. If you have any questions, reach out to Intuit Payroll, reach out to our team, whomever, and any of us will be more than happy to help. So far we've covered your AR, your AP, your payroll reports, right? So that's 3 subledgers there, or 3 groups there that we can take a look at to make sure that it's tying into our balance sheet. Now, I'm pulling up a balance sheet summary. So this is going to summarize my transactions here. And remember what I told you? Assets equals liabilities plus equity. You're welcome for the algebra lesson today, guys. So ideally, that AR report you just looked at is going to equal this number. You see that? If it doesn't, you have a problem. If you have inventory, you do the same thing for your stock status reports, any inventory reports. There, you'll have an asset here, a current asset, or fixed asset, depending on what kind of inventory it is. And anyway, now I'm going down the rabbit hole. You'll have a current asset most likely here that lists whatever valuation of inventory you have. You want to make sure that any inventory reports that itemize those items are the same. In QuickBooks Desktop with Enterprises, you will see sometimes where that report does not add up, and that's usually because people did funny adjusting entries with journal entries, didn't affect quantities or valuations of the items. They just affected the chart of accounts, and it will create these discrepancies that are there that we just need to go in and tidy up. Now, if you know a lot about accounting and you feel comfortable with it, you can also dive into your equity, but I do not recommend doing so unless you are a trained accountant. So for the most part, I usually would recommend leaving your equity portion alone. Don't mess with retained earnings. Don't mess with your distributions and draws at the end of the year. You ask your CPA or accountant to do that for you and to send you any journal entries, close them up and close your books. Okay. Um, so you just want to make sure that all that ties in. I mean, it sounds like a lot, but the end of the year is an opportunity to button everything up, to reflect on our performance during the year, to pat ourselves on the back, and to move on to a fresh year with clean books. Clean books. And I know if you let this get out of hand and you're a few years ahead, this is a frustration unlike any other. So just do yourself a favor and make sure you close this up. So we talked about AP. We went through all that. Now, when I look at my balance sheet and I go, okay, this all looks pretty good, I want to go up to my gear. And for those of you that were with me on my previous video, we call it the yoga flower 2 today. And we go over to reconcile, right? And to reconcile something, if you remember having a checkbook, you have a personal account, and you go through and you double check all your checks cleared and stuff like that, same idea. If you're an accountant, you know what I'm talking about. We're just making sure our bank statement matches what's in our books here. Okay. Now, we're going to hit get started. Let's get reconciled. So we're just going to pick an account, and it usually will tell you the last statement ending date for the last time this account's been reconciled. I'm going to close Mr. Stewart's video because I've done this once or twice, and Mr. Stewart's video does not want to close. So let's just pretend that didn't happen and move on, shall we? Ideally, what I would say is if this says 10/31/2020, I'll have my bank statement from 10/31/20 or 11/30/2021, and we'll move on. Okay, so what you'll do is you'll put in your statement ending balance. Let me hit the edit info. So we'll put like $100,000, which I know this isn't going to be right. And you would put 11/30/2020. Did I say 2020, 2021? Let's see. Here we go. And what it'll do is it'll pull up any transactions since the last year, right? Okay, so it was 2020, not 2021. Since the last time it was reconciled here. If you see some of these down here that are in gray already, the most likely that's because when you bring them in through your bank feeds in QuickBooks Online, it's going to pre-reconcile them or mark them as cleared, which is not always what I like to do because this is one of those things where automation doesn't really totally work for me because when I'm reviewing my bank at the end of the month, I want the ability to take a look and do those ticks against my statement. So what I'll do is I'll take my bank statement. I'll go, okay, this ties in, this ties in, this ties in. Well, this doesn't look right. Let me key in on this and take a look. And you'll just work through that until you have every single one tied in. And I would go by months. If you're a really sleepy company and you want to go by 2 months or a quarter, you can do that. Just make sure you have all your bank statements with you and you make sure everything ties in. Because guess what? If you goof something and you get off, you're going to have to go back to doing it by month anyway. So we just go through and tick this off. And for today, you're going to see up here in the difference. When you're done, that's going to say 0. Okay, if it doesn't say 0, you need to figure out why. On occasion, your beginning balance is off. That's because somebody's changed a transaction from a previous bank statement or reconciliation where it was already closed. They went ahead and closed and changed that and messed everything up. And that is one of the other things that keep us up at night. And if that happens, you need to go back and change that. So we've looked at our AR, we've looked at our AP, we've looked at our checking account. If you have payroll, you've looked at payroll, right? Once you've reconciled these accounts, uh, I'm trying to make this a quick video for you guys, and I get the feeling some of you guys are going to go, she went way too fast. But that's okay. We can fix it. You need to not just reconcile that account, but you need to reconcile all these accounts, unless it's just a very, like it's sleepy, there was no activity, things like that. I'll go through and I'll just say 0 and I'll just tick it off. So ideally, when you click these accounts, it'll say this was last reconciled at the end of the last month, right? So we've reconciled these accounts. If you want to see the history of reconciliation by account, you can look here. So you can see all dates. Let's see. In 2020, we reconciled it once. In 2019, we reconciled it once. If this was a real company, I'd be going, okay, who's doing this? Because you need to go back and fix it. You should see 12 a year, right? But in this case, this is a demo company, so I'm not worried about it. Okay, so we've reconciled our accounts. We've gone through our AP, our AR, and the rest. We need to go through our vendors and our contractors and make sure that our 1099 people are taken care of. So if you have, look right here, you've got your prepare 1099s button. Now, if you have the contractor solution that comes with QuickBooks Payroll, I believe it comes with Elite, or you can buy it as a standalone. Check with us if you need to know more. Then a lot of this is going to be pretty automated. But here you go. We can go ahead and hit continue your 1099s. And this is going to ask for your legal information. I'm going to put 99. Hope it doesn't yell at me. It's going to yell at me. Yeah, it doesn't like me today. So I'm not going to put in that tax ID, but the tax ID you would want to put in there. And then you would go to your accounts and you would map them. Let me just put one in here. Go back and change that later. So we'll hit next. Then we have to categorize our payments to contractors. Most of the time, it's going to be non-employee compensation. That's what we most frequently think of as a 1099 contractor. But funny enough, you actually need to report any rents as well and attorney fees most of the time as well. The IRS actually publishes instructions for the Form 1099, NEC, as well as M and the rest of them. You can always pull down the instructions from the IRS website. Does it make for easy reading? No, but that's what you have us for. Okay, so you would go through here and you would mark things that we need to pick and map. And what you do is you go, so this one says gross proceeds paid to an attorney. So what I'm going to do is I'm going to go down to my expenses and I'm going to find my legal expense. Hopefully we've got it in this one. If we don't, I'll just pick somebody. Professional, let's just pick, legal fees. Here we go. Legal fees and so forth, okay? And I do really recommend getting a copy of those instructions. Then you want to review any contractors. Now, this is going off of any that you've marked as they're going to get a 1099. You need to go through here and see if anything's missing and fill this out. Don't wait to January, please. I'm telling you this again. I'm preaching it to the back. Don't wait to January to do this because guess what? Everybody's waiting to January, and all the accountants across the land that are being requested or that have requests for their W-9 information are going, oh my gosh, why didn't you ask for this last quarter? So I see you guys. I'm right there with you. So don't wait to January. Do it now while we're wrapping up the year, okay? So then once you have this information, if we had information populated, you could print off your information sheet and double check it. Okay, and then you would hit finish and you would wrap it up. So for us today, for the purposes of this video, I'm not going to finish this because I don't want to have any 1099s. This is a demo company and I don't need to start doing that. But if you look here, Intuit will e-file the 1099s with the IRS. If you want to do it yourself, you can do that. If you don't want to use Intuit at all, you can always get a third-party thing, like it's 1995, get one of the CDs at the Staples, right? But I recommend going the easier route and doing it within QuickBooks. You can e-deliver 1099 through Intuit and they'll print and mail them for us as well. Okay, now you can see here they want you to finish it by January 27th to meet the guidelines. Okay, there's a nice little FAQ at the bottom. So that's your 1099s, your vendors. You've taken care of your payroll stuff. You've taken care of your AR stuff. You've taken care of your AEP stuff. If you have fixed assets, and we need to talk about depreciation, that's another thing along with equity that most of the time I recommend Talk to your CPA, get them to draft you a book-based depreciation report that you can book to your books. With QuickBooks Desktop, I believe Enterprise and certain editions had a fixed asset manager. QuickBooks Online does not currently, but there are third parties you can use if you need to do this. That being said, if you're savvy with numbers, you can generate your own book value depreciation reports, especially if it's something super easy like straight line, where you just take you have to calculate your base, what you paid for it and the cost putting it into service. You take your salvage value away from that. That gives you your depreciation base, and it's exactly what it says. You depreciate it over the number of periods of the useful life. And you guys are going, I don't know what you're talking about. Again, that's a great opportunity to call us here at CERTM or speak to your accountant, bookkeeper, CPA, and the rest. Okay. And you know what I'm always going to say? Before you enact a lot of these big changes, make sure you do talk to the professionals in your circle and make sure that they're in agreement. I always say this, I'm here to provide a little bit of education with a little bit of entertainment. I talk a lot, and I'm not going to say that I that I cover everything. So just make sure that you check in with somebody. Okay. So we've covered some of your standard reports. There's, I believe, close to 100 of these. They add them all the time. I can barely keep up with them. Look, we've got a RevRec report now. That's pretty cool. See what I just said? It's in beta. You see what I just said? You see what I said? They're always adding this new stuff, and I'm going, holy cow, where's the memo on this one? I just did the updates video, and I don't see it. Look at that. Updated a few seconds ago. So there's a RevRec report now. Ooh, guess who's playing with that on lunch break tomorrow? Wow, I sound like a nerd. Anyway, moving on. Ideally, once you complete all these steps and you've gone through like your AR, your AP, your payroll, notice I keep repeating them. You've gone through your fixed assets, okay? Any other thing that has substantial information on your balance sheet or your profit and loss. Just because that profit loss resets doesn't mean you get a blank slate. You need to make sure it's accurate, right? Once you have all this done, you should be able to run your balance sheet summary, which is this little doodad. We talked about it. It's the one with the algebraic equation in it that drives us all nuts. And you should be able to run your profit and loss. Did somebody favorite this for me? Why did y'all not favorite this for me? Because it's so much more easy when you favorite it for me. There we go. Here we go. Your profit and loss. Under your profit and loss, you could say for this entire year, if you're doing this in January, make sure you change it to last year. And make sure you know your accounting method. Depending on your level, your revenue and things like that, you may be forced to be accrual, or certain kinds of or inventory-based businesses, things like that. There's guidelines. A lot of small businesses tend to lean towards cash. The difference being, if you are cash basis, you reflect that income and expense when you got it in your hand or you spent it, right? If you're accrual, it's when it was earned or over the time that you had utility of it, okay? And we're going to be going on forever if I don't wrap this up. So anyway, here's your profit and loss. Ideally, you'd be looking at this. Everything looks good. You shouldn't have any negative numbers. If you do, maybe it was a mistimed refund or something, but the profit and loss shouldn't really have any negative numbers. And then you have on your balance sheet, the only negatives would be like contra accounts, which is like depreciation. You have your amount of your fixed asset, like $100,000, and then I've booked 20,000 in depreciation. So you have a contra account, which is like an opposite account of that, which then says, okay, well, my fixed assets are worth $80,000. Okay. I feel like this is like accounting in a box today. Anyway, so you've done all that. If you've done that and you're a business owner, for the most part, you might miss one or two little things, but if you've knocked those out and you talk to your accountant or you talk to your bookkeeper, you say, hey, this is as far as I've gotten. Can you take a look at this? You've probably done about 99% of the work, and they should be able to do any final adjusting entries, wrap it up, get your taxes filed, and you're good to go for next year. The big thing to do is treat this as like your book report for the year. You're more interested in making sure the data is accurate And there's going to be adjustments made for different kinds of tax items that may not be fully deductible, but those are all going to be done on the tax side. You want to make sure that this is a book report of what you've done for the year, how well you've done for the year. I really hope you've done well because you deserve it. We've had a rough few years. And then honestly, if you really dig into the numbers, you can see of how you can do better for next year. Like take our profit and loss report here. You see this? It looks pretty simple. I'm going to look at this. I'm going to say, okay, I sold a lot of product income this year, but watch what you can do here. Okay. And this isn't even touching on our little flexi widgets in our custom reporting module that we went over the other day. If I go here and I go to customize and I change this to columns and I put months, I'm going to run this again. And I'm going to say, wow, this is what I did every month. This is why timing is so important in accounting. So important. Okay. And honestly, on top of that, I'm going to scroll up and I'm going to say, can I make this accrual? Because it's going to be a little bit more accurate for when you earned it. Because when you invoice a customer, you're not getting paid that same day. Most times it's going to be a month or two later. So if you do accrual, it's going to key off of your invoice dates and you can toggle that back and forth depending on whether you're cash or accrual based for accounting. So don't worry about, I just changed it to accrual, but I'm cash basis. Everything's going to blow up. No, it's not. It's not. Go lay down. We're good. But you can take a look at this P&L by month for the year and you can see some trends, okay? There's a term called seasonality if you haven't heard it before, and it basically means, like in accounting, guess when your biggest bits of revenue are going to be there? It's over the fall and spring. Summer, July, I swear everybody goes on vacation. Kids are out of school. It's so quiet you could hear a pin drop. But come back in October, November, December, we're all busting our tail. And over the years, you're going to be able to create budgets off of these. And if you have your profit and loss by month, and then this doesn't have anything to do with wrapping up for your taxes, but also tends to correspond with December being my planning month. I do all my next year planning in December. You can build budgets off of these kind of numbers that have that seasonality built in, and you can build your scenarios like I'm expecting a 10% increase in my revenue next year, but in return I'm going to have to increase my payroll expense by 2%, and you could do all those scenarios here. That being said, if you need more intricate planning tools, we have third-party applications for that too. Anyway, you can dive into these numbers, and I kid you not, in 15 years of being in business, and I keep looking to the side, I apologize, in 15 years of being in business, the people and the business owners that know their numbers, I can say with confidence, I'm going to put my odds on you, man, because you're going to be more successful than the people that base their financials off of what's in the bank. You just are. So go be a planner. Go work on your tax and year-end wrap-up. Take that opportunity to go out and build a business plan or strategic plan, and to do your budget for next year. It all wraps together. Your CPA is going to love you because you're going to have all your reports done. You're going to have your 1099s done or ready to review. Everything's going to be in a good spot. And do what I do. Mark that month of December, unless you're somebody's really busy in December. I am sorry, retailers. I know you are crying for mercy right now. Mark the months of November and December off for your yearly planning and read it like a book. Get in there and get interested. Okay. So treat it like your fantasy football. This is exciting stuff. Okay. Those of you that are excited about fantasy, I got a friend like that. I kid you not. When it's fantasy football time, I'm like, holy cow, you're Einstein. So make sure you get in here in your books and you treat this like your fantasy football and you get to know these numbers and you enjoy looking at these numbers. Because there's nothing that is more gratifying than working on your books month after month and starting to see improvement because of things you noticed in the numbers, not stuff that just comes by. And you're one of those people who says, well, I got it all up here. We know what we know and we don't know what we don't know. Okay? There's no way that you're going to have everything up here and you know everything to do with your business. There's just no way. I'm sorry to break that bubble. I know you know how to do what you do very well, but when you look at your books and you start connecting the dots and seeing your trends, you're going to have tangible changes for your business. Mark my words. And if you do this and you watch this video and you buy in and you're like, I'm treating my books like fantasy football and it makes a difference for you, can you please let me know? Because I would love to hear your story. That being said, if you want to tell me to shut up, tell me that I spoke too long or too fast or too high or too low, send me a comment, send me an email, send me a smoke signal. I'd love to hear from you. Again, if you like this video and you'd like to see more of it, or you'd like me to dive in deeper to any of these sections, like the video and leave me a comment or send me an email. If you like the kind of content that we're coming out with on Certum Solutions channel, make sure you subscribe to our channel. And if you want to talk about tools that help you better with the planning, with the payroll, with the bill pay, with any of this, reach out to us. We're happy to help. I'm sorry for y'all that I lost at minute 5. I do ramble. I know I do, but I just get so excited about this stuff. And it's kind of like Dave Ramsey says with his personal finance. When it comes to business, like I just get so passionate about the fact that I believe when people get to know their numbers and learn their numbers, and I'm not saying don't have a bookkeeper or an accountant. I'm not saying that. Have them do the numbers, but you need to know how to read your numbers and utilize your numbers. You're going to see tangible changes in your business. Okay. So, with that being said, I hope y'all have a wonderful day. I hit my 30-minute mark. I was shooting for 30. I am so sorry. Anyway, I'll talk to you next time. Let me know what I can help with. And thank you again for watching. Bye. Hi, this is Katie, and I am so sorry. I was in such a fluster about hitting 30 minutes that I completely forgot a very important part of this process. Once your reports and everything are nice and tied in, the last thing you want to do is go up to our gear flower here in the top right, click on Accountant Settings in your left-hand column, and I want you to click down on advanced for me, okay? And there's a question here. If you've watched my videos for any length of time, you know I talk about this all the time, okay? But you want to make sure you close your books and make sure that when you close the books that you do have a password and you give that password to the one in the office that's going to make sure that everything is right, not the one that's just going to give it out to everybody and everybody's like, oh, I don't even know why Sharon has a password. She gives it to everybody. So make sure you have your password here enlisted and make sure you change your closing date. Now I have a spoiler alert for you right now. This isn't going to go through. And why is it not going to go through? There's a pretty clear explanation. I'll tell you what it is. As you hear from us on numerous videos about not having negative inventory quantities, okay? Don't have negative inventory quantities. These cause problems. If you don't believe me, I'm about to show you a tangible problem. And to recap, you can't have negative inventory quantities because unless you live in some kind of twilight zone where this is possible, they don't exist. And I challenge you to explain to me why that should be possible. So when I put in my closing date and I save this, it's going to say you can't close your books because one of your products has a quantity on hand of less than 0 as of this close date. This is the one that has the negative on hand, and it's apple trees. Now, in theory, as we went through this video, if you had inventory turned on in your system, you already looked at this report and you already said apple trees has a negative quantity on hand, and I got to change that. So this isn't going to happen to you, right? But if it does happen to you, you have to go back and fix it, and hopefully you've already taken care of that. Again, one more time, I am so happy that you chose to watch our channel today. If I can help with any questions or you want to talk to our team, please feel free to reach out. And I can't wait to talk to you guys again when I return from Connect next week. But in the meantime, it's been a blast, and I just thank everybody for their support of our channel. Talk to you soon. Bye.